Good morning and welcome to the Hawaii State Senate Committee on Commerce and Consumer Protection. This is our Friday, January 31st, 9:30 a.m. agenda in room 229 at the Hawaii State Capitol. Because we're getting started with the session again, I'm going to read out some of the particulars so that everyone understands what's going on and how we like to conduct business in the committee. So for everyone watching online and in the room, this meeting is being streamed live on YouTube, and in the unlikely event that we experience technical difficulties that require us to abruptly end the hearing, we will reconvene to address any outstanding business on Tuesday, February 4th, 2025 at 9:30 a.m. in this room 229 at the Capitol. And a notice will be posted on the legislature's website. If you've submitted written testimony, the committee has reviewed the testimony. I've read every piece. And so it is our customary practice in this committee to allow in-person and online live testifiers 2 minutes to clarify or share any additional thoughts or feelings related to your testimony. And I would respectfully request, in order to keep the agenda moving, that you not read verbatim your written testimony because we've already seen it and reviewed it. We have a number of bills and we have a specific block of time to hear and then make recommendations and vote out those bills. So we do want to try and keep things moving as best we can. Your 2 minutes are your own to share, but if you'd like to stand on your comments, then we'd be happy to have that done as well. And just let you know, again, we've reviewed your testimony. If you're online, your audio and video will be muted and disabled until it's your turn. We will queue you up, and if there are technical glitches on the feed, we will try to come back to you and make sure you have the opportunity to speak. And also, this is a respectful reminder that we do operate under the Senate Rules of Decorum in this committee. So personal attacks and accusations are not allowed pursuant to the rules and will be addressed at my discretion. So please stick to the issues. Thank you very much. We'll move to the first measure, SB 697, relating to an income tax credit. This measure establishes a non-refundable individual income tax credit for expenses paid to retrofit a residence with wind-resistive devices. First up, we have the DCCA Insurance Division offering comments. Good morning.
Good morning. Good morning, Chair Keokolole, Vice Chair Fukunaga, and Senator McKelvey. My name is Jerry Bump. I'm the Chief Deputy Insurance Commissioner with the Insurance Division. We've submitted our written testimony. There is one comment that I want to provide orally in our haste to generate testimony on a numerous amount of measures. We did leave out, in looking at this bill, there is some requirements that placed on the insurance commissioner to develop the certification standards for wind resistance devices. We don't obviously have that expertise within our division itself, so we may need to have an appropriation to either outsource that or hire additional staff that can handle that, the volume of the credits that may need to take place. Other than that, I'll be available for any other questions. Thank you.
Thank you very much. And thank you to everyone else who submitted testimony. We have a pilot running in this committee and we're asking for testimony to be submitted 48 hours in advance of the hearing. I know that's a stretch for a lot of people, so thank you very much for everyone who tried. Department of Taxation, offering comments. Good morning.
Good morning, Chair, Vice Chair, members of the committee. Winston Wong on behalf of the Department of Taxation and Director Gary Sugunuma. We've submitted written comments in our testimony. We're going to stand on that testimony, but just to piggyback on what DCCA has said, we just defer to their ability to really administer and certify this credit. But in the event that they're unable to do so, we do ask that the third-party certification requirement do remain in the bill. Thank you. I'll be available for questions thereafter.
Thank you. Next, we have the Hawaii Insurers Council in support.
Michael Friedi in support. We stand on our testimony.
Thank you very much. Tax Foundation online offering comments. Good morning.
Thank you, Chair, Vice Chair, and members of the committee, there at the hearing or otherwise. This is Tom Yamachika, President, Tax Foundation of Hawaii. We did submit written testimony. Just wanted to kind of point out that this program seems to really cry out for a subsidy type program as opposed to a tax credit. With a subsidy type program, you can determine in advance what eligible retrofitting equipment is and kind of put it on a menu like they do for Hawaii Energy. And I think a program modeled on that would be a great fit for what you're trying to accomplish. The other thing that worries me about this is that the credit as currently drafted is 100% of costs, which basically leaves the particular taxpayer no skin in the game, and therefore there is really no incentive for the taxpayer to shop around for good deals because the state's paying for everything. Be happy to answer any questions. Thank you very much.
Thank you very much. Next we have, let me see, online in support. We have the National Association of Mutual Insurance Companies. Mr. Radich. Okay, we have him in support. And then we have Keone Dudley in support. Good morning. Okay, we have you now. Go ahead.
Okay. Good morning, Chair Keohokalole and members. Just to answer some of the things that have been said so far, we do have another bill that is supposed to form an office in the office of the governor to oversee all of this and to take money in. Let me tell you also, as far as the subsidy rather than a tax credit, we have another bill for low-income people to receive grants. And the tax credit really is for ordinary people who can afford to do the work on their houses. The lower income people would not be able to afford to work on their houses. I do want to say that we have hundreds of thousands of homes in Hawaii that could be strengthened to withstand a Category 5 hurricane with 200-mile-an-hour winds. But people need the incentive. This bill would allow them to take a tax credit for their expense to fortify their house or apartment. The people living in, the more we have people living in fortified homes, the less people will be seeking shelters. And let me tell you that although we had the Category 4 hurricane with Hurricane Iniki and winds of 227 miles an hour, we have no shelters whatsoever when it gets to be a Category 3, 4, or 5 hurricane here on Oahu. So we need to get this bill going, and I really hope that the committee will pass it today and move it on. Thank you.
Thank you very much. That's all the live testimony we have registered for today. Is there anyone else who would like to testify on this measure? Okay, seeing none, I'd like to note we have written testimony submitted, all in support from Donna Van Osdal, Jessica Herzog, and late testimony from the Hawaii Emergency Management Agency. Again, all in support. Members, any questions? Okay, we'll move on to the next measure, which is SB 706. This measure requires the Hawaii Property Insurance Association to include in its plan of operation insurance coverage for commercial properties twice denied by private insurers. First up, we have the State Insurance Division with comments.
Insurance Division will stand on its written testimony.
Thank you for standing on your comments. We also have Michael Honda in support. National Association of Mutual Insurance Companies in support, with comments, I'm sorry, and Jessica Herzog in support. Is there anyone else who would like to testify? Members, questions? Okay, we'll keep it moving. Next measure is SB 803 relating to insurance. This measure requires insurers to provide automatic advance written premium change notices to common interest community policyholders and the insurance commissioner with reasonable explanations and primary factors, disclosing the causes of any premium increase if upon renewal, premiums are scheduled to increase more than an unspecified percent. It also requires insurers that renewed property insurance policies between 2022 and 2024 for policyholders that were condominium associations, planned community associations, or cooperative housing corporations in the state to provide an explanation for certain premium increases during this period, and requires a report from the insurance commissioner to the legislature. First up, Insurance Division with comments.
We'll stand on our written testimony offering comments.
Thank you for standing on your testimony. Next, we have the Hawaii Insurers Council in opposition.
Chair Keoho Kohole, Vice Chair Fukunaga, Senator McKelvey, thank you for the opportunity to testify. I'm Michael Nofrietti, representing Hawaii Insurers Council. I'll just summarize briefly. The two key issues that we raise is, number one, in our opposition, is agents interact with the insureds in the case of AOAs. Insurers do not interact directly, and they have conversations, as we understand it, regularly with whether it's the board chair or the property management company, whomever it is, and they're the appropriate vehicle, and they have these sorts of discussions about why premiums are changing. In an already challenging market, we don't want to do anything that would make the market potentially worse, and we're available for any questions you might have. Thank you.
Thank you. Next we have, oh, that's all the registered testimony we have for testifiers who indicated they would be present in the hearing. Is there anyone else who would like to testify on this measure? Okay, we'll note that there are written, we have written testimony from the National Association of Mutual Insurance Companies with comments, and the following individuals submitting testimony, all in support: Jeff Cedino, Jessica Herzog, Sandy Wong, Ivan Ho, Lynn Madisal, Miri Yee, Michael Goliu Sr. for the Palihua Townhouse Association, and late testimony from Luciano. Members, any questions? Vice Chair.
Thank you. Maybe let me start first with Insurance Division, followed with Insurers Council, because you are the only two that are here.
I'm going to have Kathleen
Okay.
Nakasone, our rating policy manager, come up.
Okay.
She can probably answer your questions better than I can.
Okay, thank you.
Good morning, Chair, Vice Chair. My name is Kathleen Nakasone with the Insurance Division, Rate and Policy Analysis Manager.
You know, we have received a lot of complaints from condo associations, especially within the last 3 years.
Right.
About lack of transparency
Right.
regarding the reasons or the justifications, you know, for premium increases. And one of the things that I've been told is that they, when they try to get information, you know, oftentimes from their condo managers, the condo managers do not really have information. I have had people attend annual meetings where the board members, you know, could not answer questions about premium increases. The management company representatives could not answer questions. So owners in those kinds of meetings get extremely upset because one of the proposals at a recent board meeting, annual meeting, was an instance where people were being asked to sign off on increasing the coverage on their individual units because the insurance carrier had, you know, dropped their
Right.
property.
Right.
And so people are sort of scrambling, but
Right.
there doesn't seem to be any mechanism, you know, for reporting instances where individual properties run into difficulties and they can't get a straight answer. Does your division respond to, you know, issues or comments like that, or?
Right, right. So I should start by first acknowledging that exact scenario. I myself have taken many calls, and so we acknowledge that it's a problem. So Right, let me just explain, I guess, if I may, for a moment, how I think it should work, which is that in commercial insurance, which is an AOAO policy, the insurance agent does have a responsibility to the AOAO, which is the board. And so the agent communicates to the board what is going on, there's a terrible property market situation going on, it's a big increase, or you're getting non-renewed, and what shall we do about it? So the agent then will work with the board to try to find a way forward. If the coverage is going to be non-renewed, the agent should be going out and trying to find other coverage. That process, though, may take a while, a month, maybe more. And so while that's going on, it seems to me that the breakdown is between the board and their fiduciary obligation to their fellow unit owners. So just as an example, well, actually, before I get into the example, so there's, I think, part of the problem. So while I have nothing against policyholder notices per se, the admitted industry already does it. They do give renewal notices or non-renewal notices within certain timeframes. If it's a large increase, we often ask for 60 days notice, okay? But in the commercial property market, it is a very different situation. So the information that doesn't trickle down to the unit owner, I think that is what seems to be causing a little bit of the issue. And again, some boards do it better than others. I personally have property in a townhome community that is getting non-renewed by a local care. So we are getting dropped. Our agent notified our board in June, and they called an emergency unit owner meeting. I did attend. I'm not on the board. I don't think they even know where I work. I'm listening. And so this agent gave a presentation about what was going on in the market. I thought it was one of the better presentations I had seen, because I've seen several. And they let us know that we're getting dropped in February. Okay, so this was a long notice. So I think that's an example of how some boards do it better than others. And this agent knew what was going on, communicated to the board. They knew why the insurance company was dropping them. They had a plan. They were saying they were going to go to the surplus market, get ready. It's probably going to be a 500% increase, or, and then so the unit owners then were able to pepper the board with questions such as, can you increase our dues now so we can, build up stuff? And then the board said, we can't request an increase to you, the membership, until we actually know what the cost will be. And that's, I think, that's reasonable. But then the board told us, but we think, if our agent's saying it's going to be a 500% increase, please start just putting money aside, And then our board offered to have regular meetings, and so they've done that. So, and my point in telling this story is that I don't know that requiring a commercial property insurer to send a notice to every unit owner.
No,
Okay.
I don't think that,
Oh, okay.
is really what was intended.
okay.
It's more the frustration that a lot of condo associations, particularly for older buildings,
Right.
have been facing is
Okay.
very often their agents cannot really respond adequately. And so that leaves the board and the association in a very difficult position because, I know we're often told that, maintenance, deferred maintenance is the
Right.
issue. But I think a lot of times, for each property, if you have water damages or plumbing issues,
Okay.
you know what the claims are, and the insurance companies know how many buildings have had those claims.
Okay.
It's when the premium increases are coming and you oftentimes do not have, the full 60 days notice. So then it throws condo association planning into a lot of disarray because most boards, they have to start during the summer.
Right.
They kind of present a recommendation to the unit owners in the fall.
Right.
They have their annual meetings in the spring, and a lot of these are not what they are used to working with. And so we're just looking for what's the best way, to provide an intermediate mechanism where either the division as well as, the real estate commission is examining this, because most of the people who have tried to complain to the real estate commission have said the real estate commission is not really equipped to deal with their complaints. And so, we're sort of shuffling back and forth between many different parties.
Okay, I don't know, Senator McKelvey, can you?
Well, the question was
Oh, yeah,
directed at
right.
you, so you
Okay,
can
sorry.
respond, and then I can ask if
Okay,
other members have questions.
sorry. So I think that if it's a matter of timely communication or more complete communication, if you don't think it already exists, or the complaints are that it doesn't already exist, I would say that carriers could probably do better. In that regard.
Okay, thank you.
No, I don't know why I'm getting asked questions.
Sorry,
but
I
I'm just
did-
gonna be honest with you, I'm
yeah.
so disappointed in you guys, it's not even funny. With due respect to the rules and the chair. Looking through all this testimony, instead of offering this committee helpful ways to tweak these bills to take care of consumers, we don't think these things up at night. We get reams and reams of emails and phone calls and people coming up to the store. This is a huge problem. We expect an insurance division that's gonna be there for the consumer and give us guidance, and it seems to me you're just taking the side of these guys. Sorry, Chair. What
Okay,
I would really like is to acknowledge there's a problem, as the
Which I
senator has
did.
said, and then try to help us craft a solution so that in statute, there's some baseline things that consumers can expect. We understand there's gonna be agents like yours, and it sounds like they do great jobs, and there's those that don't, and there's many different variations.
right,
But we're looking for baseline statutory protections to help the condo associations, and as my good friend over here can attest, this is something that I've heard more emails on insurance and these issues encompass in all these bills than I have on the super ferry, on marriage equality, even COVID. So
Okay.
we need your help, guys. I'm sorry I'm a little
no,
excited a little bit here,
it's
but
okay.
you know.
No, it's okay. Like I said, I hope I had started with acknowledging that we do recognize the problem, because I personally get a lot of calls and I do talk to a lot of people. And I don't think it is good that especially the unit owners are not given timely information, or they don't even oftentimes know why, or it's being blamed on the Maui wildfire. I mean, all kinds of different things. And so, yeah, we would like to try to work to find a solution.
That would
Yeah,
be most
something,
appreciated. I
right.
think I can't speak for my colleague, but I would appreciate it, because
Yes.
in other states, it seems their insurance division is helping lawmakers to do things to not only protect consumers, but to acknowledge the market-wide issues that are affecting everybody.
Yeah, and it wasn't my intent just to, I don't want to appear like I'm shilling for industry, but I am just trying to point out that it should be working better than it is, and I guess we wouldn't be here if it were, so we're
So we need
committed.
your help, and I
Yes,
appreciate that.
yes.
Chair, I appreciate
Thank you,
your-
sir.
Members, any other questions?
Well, I think we've covered
Yes.
the waterfront. I don't know if Mr. Onofriedi wants to add to
Thank you.
the discussion.
The only thing I'd like to add is, with only 3 markets currently writing, what's not happening is that Company X is canceling somebody, and Company Y, who's licensed, is writing them at a much higher premium. If Company X is non-renewing, a surplus lines company is coming in, and the surplus lines company is actually not managed or regulated by the insurance division. So it's very difficult. The bill would not cover those surplus lines entities that are actually charging the higher premiums.
Should you guys cover surplus lines?
Should we regulate surplus
Yeah.
lines? Well.
You may want to, I'm sorry.
Yeah, please
Sorry
come
about
back
that.
up.
Excuse me. Hi, Kathleen Nakasone with the Hawai'i Insurance Division. states don't regulate surplus lines. I think the surplus market serves a very critical role. I know it may not seem like it, but in my opinion anyway, the purpose of surplus is to try to really fill a gap when the admitted market isn't working. And maybe that's the bigger question. What's going on with the admitted market that we don't have admitted carriers wanting to write condo master risk? Okay, it's because right now, we have many commercial programs on file. Commercial program filings do get filed, and they're actually reviewed and disposed of pretty quickly. And so within that commercial program, if the insurer wants to, write a condo master, they can. We would love it. But I think that right now, and maybe they could speak better to it, but the risk, every carrier has an appetite and limited capacity to write programs. So, the condo master program is just a very difficult line. So a lot of the bills that, that are being proposed that, might be able to help bring back the commercial, invite some carriers back, but right now, the commercial program in the admitted market, even though they can, carriers are not writing the risk because the perception is that the risk is not good. Okay, so then when the admitted market is not able to write, as Mike over here explained, the agent is then scrambling to try to find coverage. And I think that right now, it's been known that the brokers have come to the division saying that, the property market's hardening. We are aware of that. And what can we do? And so when the admitted market is contracted, and it's been contracted, the only way that the condo, the building, or the community can get insurance that they need immediately in case of a disaster is to go to surplus. So surplus, and I think one of the concerns is that with the surplus market, some think that, oh, terrible, surplus market, it's too expensive, they're price gouging. But the surplus market is very, in my opinion, very reactive to it's very competitive. It's very competitive. So they're competing on, who wants to insure that building, who wants to insure the building. And one can argue that the price is well above the admitted market, but it is the cost of the risk. And so if we didn't have the surplus market, or we were made to regulate the surplus market, in my opinion anyways, I think that some of the concerns you hear right now about delays in review, might spill over into the surplus market. And if the building cannot quickly find insurance, I think that's a problem. Now, I don't think that the surplus market should be a lifestyle, as they say. The purpose is to, like, oh my God, we're getting canceled. Oh shoot, we have to go to surplus. This is terrible. Then you start identifying, oh, this is wrong, that's wrong, the other's wrong. You try to improve it, and then hopefully then you can return back to the admitted market. That's generally how, as a regulator, we hope it goes. But I think right now, the admitted carriers know how much surplus is charging. They know this, and yet they don't want to write. And so that tells us, as regulators and perhaps the legislatures, that the risk is so great or so uninsurable at any premium. So I think I really do commend the legislatures for introducing these bills that are trying to improve the condition, because we think that when that happens, when more buildings or communities improve their risk profile, then in time, perhaps, the admitted market will be more willing to write. Thank you.
I have
Yeah, go, no, because I'm handing it off to you.
Okay,
Vice Chair.
I guess that's all great, and I don't disagree at all. The hard part for us is that for a lot of the premium increases that have been occurring over the
Right.
last 3 years, they are competing with the ability to make repairs and upgrades.
Yes.
And for these older buildings, a lot of whom, really, since the Marco Polo fire, there's a class of buildings who actually, when we checked with the fire department, have had a pretty good record. There were very few fires and fatalities within that group of buildings in the last 20, 30 years, and even within the last 5 years. But for groups like those, with the premium increases constantly occurring and the need to upgrade or, improve their resiliency, many of them cannot keep up. And so they're in the process of figuring out, well, if they have to sell, but they can't sell, to people who would need financing, they're gonna have to take a big loss. A lot of times, these are elderly people. I have had so many horror
Yeah.
stories that
Yeah.
people are telling us, this is the year that if we don't have a plan, we are gonna have to, account for a lot of people losing their homes. This is, it's been
Right.
going on for, 3 years now, where
Right.
I think we're running out of time. That's the bottom line. And so to the extent they all agree on the need to move towards resiliency as well.
Right,
But
right.
without, some mechanism, either
Right.
from the insurance division or, with whatever we come up with, HPIA or any of the other combinations, mutual, et cetera, they are just not gonna make it. And
Right.
it's not for want of trying.
No, right. I think that I acknowledge that, and I think that it is a problem. I don't want to say insurance division cannot help, but the insurance pricing is about matching the risk with the premium, and it doesn't consider race, gender, or ability to pay. And so I think that things like, so that's why we're coming from at it from an angle of, okay, improve the property. But you bring up a very valid point. It's a very difficult situation because we can't get, the premium's not going to come down and the admitted market won't come back unless the risk improves. And the only way to improve the risk is to improve the building, but that costs money. And so do we do subsidy? Those are policy positions beyond, right, right.
We all agree on hard,
Right.
we're trying to,
How to get there, how do we?
Yeah, if insurance can be a solution, and so
And
we'll
so
continue to work with.
Thank you, Ms. Nakasone and
Thank you.
Ms. Donofrio. I think, this conversation was coming.
Yeah.
So I'm not surprised it took 3 bills for us to get there, but we're gonna hear a lot more vehicles as we
Yes,
just mentioned on it, so thank you.
thank you.
If there are no more questions, we'll move to the next measure. SB 805, relating to condominium insurance. This measure establishes the Hawaii Condominium Mutual Insurance Company to provide property and casualty insurance to high-rise residential condominium properties and the owners of those units. It also establishes a loan fund to assist associations of apartment owners experiencing increased insurance costs and appropriates monies. Insurance Division with comments.
Stand on our written testimony for that.
Thank you for standing on your testimony. Attorney General's Office offering comments. Good morning.
Good morning. Chair and members of the committee, we have provided our written comments regarding our concern with inapplicable provisions of Chapter 431 and Article 14A that are being incorporated into this new article, and clarifying whether the condominium loan fund is within or outside the state treasury, and also appropriating money from the Hurricane Relief Fund when its purpose does not include the providing insurance to condominiums. Thank you.
Thank you very much. Next, we have Hawaii Insurers Council offering comments.
I guess I'm still Mike. So we offer comments, basically just highlight 3 of them. One is this would require new capital, and we do already have HPIA and HHRF that have some level of capital in them. Second is that COMIC would have to pay premium taxes, which would increase the premiums otherwise charged by 3.265 or 4.265%, depending on the structure of the entity. And finally, there are differences in work comp. So HEMIC has been very successful as a mutual insurance company. It's been around nearly 20 years now. But property risks are very different than workers' comp risk. One big storm could bankrupt a property insurer. And with not being in the guarantee fund for a year and a half, should it occur in that window, it could be a problem because the members would be assessed as the owners of that mutual insurer. Thank you, and I'm available for any questions.
Thank you very much. Okay, that's all the registered testimony that we have on file for organizations or individuals who indicated they would be present. Is there anyone else who would like to testify on this measure? Okay, we have written testimony from the Mortgage Bankers Association of Hawaii offering comments, Jeff Sadino offering comments, Jessica Herzog, Ivan Ho, Sandy Wong, all in support. The Department of Budget and Finance offering comments. Lynn Matisal in support. Mike Goliu Sr. in support, and Luciano in support. Again, last call, did I miss anyone? Okay, members, any questions?
One quick question.
Vice Chair.
For Insurance Council. Mr. Onofriani, in your testimony, you said that the high-rise condo market was really too small and too limited to work with a mutual insurance model. But if the mutual insurance model was extended to cover all condominiums, and I think the DCCA number that they provided us with during the past summer was in the range of about 143,955 units, which I think is more than 500 buildings. Would that be something that would, be a more meaningful kind of pool?
And I apologize, my testimony probably wasn't as clear as it could be. Our concern is that the issues in the property insurance market go well beyond condo buildings.
Right.
And whatever our solution is, it needs to be much broader than that. That's really where the focus of our testimony was. Not to go back to the prior bill, but surplus lines premiums are actually coming down a little bit. And that's typically what happens in this kind of a terrible market cycle. Initially, the premiums are crazy high. People start getting a little more comfortable writing the risk, so surplus lines companies come in and start gradually moving their premiums down. So there's a possibility that there'd be very few condo buildings needing coverage under COMIC by the time it was established. That's potential. Not saying it's likely, but that's something that could happen. So that's the combination of our comments, where we're not sure how many buildings would come in by the time this was set up, and there are broader issues facing the property insurance market, both in Hawaii and worldwide, that we think need to be considered.
Okay, I guess my follow-up question to that, though, would be that if the mutual model were really designed to cover properties that are in the perils and casualties kinds of area, how would HPIA be a better model for those kinds of structures when they have such a small pool of policyholders currently?
Well, they already have some capital as a starting point to get running. Both, whether it's COMIC or HPIA, the first buildings they write, they are not going to be able to insure fully. They are going to get reinsurance to provide coverage. Whether you buy the reinsurance from HPIA or from COMIC, price is the same. So to capitalize a new entity, I just think from a legislative standpoint, you have to just give consideration, how much capital do you need to deploy for this solution versus a solution that's already sitting there?
Okay.
We're not in opposition, right? We just want to, our comments tend to be fairly technical about what would be needed. So we will support whatever the legislature decides in this issue.
Okay, thank you.
So you're like basically advocating that we don't, this could split the risk pool by putting condos off on their own, and you're saying you should try to get as much coverage or as much entities within this risk pool beyond condos?
Well, I just want to make sure we're prepared for what we see coming with climate change and everything else. It's a property insurance issue more broadly. And if the legislature determines condos we want to isolate in one place and everything else somewhere else, But if there's a way to make that work, if the legislature decides we want to have all of the markets of last resort in HPIA and HHRF, that can be made to work as well. You know, I personally think that we already have vehicles in statute, so maybe that's a better way to go, but there's a way to make this work as well. It's just, you know, like everything, it takes capital.
Okay, thank you.
Any other questions? Okay, thank you very much. We'll move on to SB 1044, which is also about insurance. This measure expands the powers of the Hawaii Property Insurance Association and reactivates the Hawaii Hurricane Relief Fund to help stabilize the property insurance market in the state, and requires a study. Insurance Division, in support.
Good morning again, Jerry Bump, Insurance Division. We are supporting this measure. This measure came out of the governor's executive and legislative condo property task force. Primarily, it does a few things between, it essentially expands the authority of HHRF and HPIA to focus on both of the condo market that's experiencing the crisis. It also asks for a study, which we're more than happy to do to help develop and look for long-term solutions. Other than that, I'll be available for any comments.
Thank you. Attorney General's office with comments.
Good morning, Deputy Attorney General Andrew Kim. Just our comments, we provide written comments regarding our concern with inapplicable reference in the statute. Thank you.
Thank you very much. Hawaii Green Infrastructure Authority, in support. Thank you for standing on your testimony. Hawaii Insurers Council, in support.
Stand on our written testimony and support.
Thank you for standing on your testimony. State Farm, offering comments.
Stand on our written comments.
Thank you very much. Hawaii Bankers Association, in support.
Bankers Association stands on its testimony.
Thank you very much. Hawaii Realtors, in support.
Thank you. We stand on our testimony and support.
Thank you. Hawaii Credit Union League, in support. Okay, and AARP Hawaii, in support online. Good morning.
Yes. Good morning. I'm Audrey Suganakagawa from AARP, and we stand our testimony and support. Thank you.
Thank you very much. That's all the registered live testimony we have on this measure. Is there anyone else who'd like to testify? I cannot, that's everybody in the room. We have written testimony in support from Townhomes at Fairway's Edge, in support, Hawaii Financial Services Association, in support, Mortgage Bankers Association of Hawaii, in support, Brian Allen Aquino, in support, Jason Chang, Monique Ibarra, both in support, Cherry Washington with comments, Jessica Herzog, in support, Chair Alice Lee from Maui, in support, Susan Ventura, in support, Councilmember Nohelani U'u-Hodgins, in support, and Merle Minamishima, in support. That's all the testimony we've received on this measure. Members, questions?
Go ahead, no.
Vice Chair.
No, Vice Chair first, sorry.
Okay, for the insurance commissioner. Okay, what is your estimated time frame for HPIA to become operational, to be able to provide either premium assistance or something beyond that?
Sure. So HPIA and HHRF are not part of the insurance division per se. We have had discussions and we've listened to where they're at and their concerns. So specifically for HPIA, they're going through an IT system transformation that they are working. And once they complete that, then they'll be able to add in more product lines. So at the moment, their IT system's not capable of doing this. They're supposed to go live on that in September. So that could still take some time as they develop maybe the product, and because this isn't something that they're currently offering. So I can't, you would have to check with HPIA. I mean, I could and get back to you on that. on what they feel. But that would be a decision of their board of directors, and they may not have made that decision yet on, you know, potentially entering into this market and offering those types of policies. But again, I haven't had conversations directly with
Well,
them.
if you could
Sure.
pose that question to HPIA and have them submit response to the chair, that would
Sure.
be very helpful. There's a section in Senate Bill 1044, which kind of sounds as though a lot of the condos that, you know, are among the older properties that are facing extreme duress may not even be eligible. And I'll just read it out loud, where the condos or the HPIA may prohibit coverage under this article for any high-rise condominium for which the association or its servicing entities or any agents thereof have identified maintenance issues that materially affect the insurability of the high-rise condominium. So who would make that determination? Would it be HPIA? Would it be the condo association? Who determines whether or not they have a maintenance issue that materially affects their insurability?
That would be part of HPAA's underwriting guidelines. So they would make that determination if they deem the building as uninsurable because of serious lack of, you know, keeping up with the maintenance of the building. They wouldn't qualify under this, which is similar right now in HPIA's operating model, is they're not a take-all comers.
Okay.
There is concern if they were forced to take all comers, then that could really jeopardize the financial stability of that mechanism.
Okay, thank you.
Thank you.
I have one follow-up question for Hawaii Green Infrastructure Authority. Okay, last year we were so encouraged by the adoption of CPACER's additional financing capability, and I extensively, you know, talked about it to many, many condo associations. Can you provide an update on how many applications your authority has received since, you know, the adoption of the new legislation?
So we received about 15 proposal requests from different condominiums. What I do is I send it to the CPACE finance, because we don't finance, right? So I send it to the lenders, and they are able to provide the proposals to the condominium associations. Condominium associations then do what they do. They go through their due diligence. As far as I know, we have not had any loans that are ready to close yet with condominiums. However, there's two things going on with that. One is, again, these are private lenders, right? Just like our banks and credit unions, and some of them don't feel comfortable if they're underinsured. The other one is the CPACE financiers needed a opinion letter from an attorney here to give them the comfort that the CPACE assessment is legal. I understand that opinion letter was completed at the end of December. So they weren't able to lend before that anyway. Okay. I do know there is a project that is looking for financing. It's not a condominium, but I think the lending will begin. But again, the financiers have the same concerns if it's underinsured.
Okay, so at this point, there are no condominium associations that have completed the process?
No.
Is that, okay? Yes. Thank you.
Gordon, while you're here, I have a question for you. In your testimony, you propose an amendment to Section 2, subsection 3 of the definition of condominium to clarify that they're used primarily for residential purposes. What was the point of the?
Yes, so I'm depending on the will of the legislature, but when I read residential, I read it as a condominium that has only residential units. But there are many condominiums, even the older ones, that have like mixed use. On the bottom, there might be a small commercial site. And so if the legislature does not want to, if they're reading it the same way I do and does not want to exclude those condominium associations and projects that have commercial on the bottom, then that's the recommendation.
I think it would be a good idea because we've been pushing mixed use in all these other committees quite aggressively. So that has to be part of the part and parcel. We're expanding it, right?
Yeah.
Thank you. Any other questions?
Appreciate all the work you do, by the way. Oh, one quick question, Madam Chair.
Go ahead.
Mike? Don't worry, I like you, man. Contrary to popular belief.
Well, most people don't, so don't feel bad.
Personally, you're good, brother, but back to business here. I've been kind of critical of, my concern is looking at this kind of, I guess, is a fair plan, right? I mean, of the fair plans is that, they're benefit poor, the rates are super high, and they don't, and with HPIA, they don't have the infrastructure and shouldn't we look to an RFP, an existing entity perhaps, to be running something like this so that they have the structural ability to be able to carry this program out and potentially get access to the different things that are needed to?
So in our testimony, I think one bill from now or two bills from now, we do think one of the good ideas on the table is to have an insurer manage whatever entities result from this legislative session in terms of speed to market, in terms of infrastructure that's currently available. So, HIC believes in that and we support that.
Okay, I know it's a bill coming up and it's kind of intersection with this.
Yeah.
These are all, like, as you can see, ecosystems
Well,
are
we're all
tied
trying
together.
to, we all know what we're trying to address here, and we know that it's huge for our future and for housing, beyond anything else. So, it's a tough one.
And that's why I've also been advocating that the banks be more of an active player in this. So anyway, but thank you, Chair. Appreciate it.
Vice Chair.
Okay, a follow-up for Hawaii Bankers Association. Currently, Senate Bill 1044 doesn't provide for any form of financial assistance for condo associations. It's kind of more, availability of insurance.
Correct.
In terms of, what the Bankers Association would be looking at, are there opportunities for, the HHRF fund to serve as some sort of, credit starting point by which the bankers might be able to provide some sort of intermediate financing on a much faster basis than any of the other loan programs that we're talking about?
Yeah, sure. Thanks for the question, Senator. Mihoko Ito on behalf of the Hawaii Bankers Association. So I don't know about using the HHRF mechanism to provide the funding for that. That's because, the structure of that is very technical. So I'm not sure whether that could be used. However, I do know about, in terms of like access to capital, right? There are things that have been done in other states that address access to capital for certain markets, right, that may be troubled and can't access that on their own, including, there's two that I'm aware of. One is credit enhancement programs. And in fact, there is another bill that hasn't been heard yet that proposes a credit enhancement program. Second is to partner with CDFI's community development financial institutions, which are, a different sort of lender that actually look for these critical markets that can't get access to capital. And so both are like public-private partnerships of a sort, right? That could provide some access to capital like you're talking about.
Okay, and are those, types of alternatives or solutions, things that have been discussed within the task force?
Not discussed within the task force necessarily. I'm trying to think if they actually ended up as options in the final report. I don't remember whether they actually ended up as options in the final report. I think they might have, but it is something that through a couple other bills that have been introduced this session are options that I believe are on the table.
Okay, thank you very much.
Sure.
Members, any other questions? I have a question for the insurance division. We've gone round and round on the number it would need to capitalize these programs between the discussions last year and then even in the joint informational briefing on insurance that took place on Monday. From my recollection, the range is somewhere, just for HPIA, the range is somewhere between 10 million and $2 billion. Do you have a number you would like to propose, at least for us to consider including in the committee report for our members?
So from the administration's, at least communications that the commissioner has had, that number would be 50 million.
So that's just for HPIA.
That's just for
And
HPIA.
the bill proposes a significant amount of discretion be placed in the HHRF board. You're confident that the money in the hurricane relief fund is sufficient for them to do what they need to do?
At this time, we are confident that the money, the funds that are existing in the HHRF is sufficient for what they need to do to get up and running.
Okay, thank you.
Thank you.
Okay, if there are no other questions, we'll move to the next measure on the agenda, which is also about insurance. SB 1128 establishes requirements for insurers relating to claims for additional living expenses under homeowners insurance policies, including situations where losses are incurred during a state of emergency. Insurance Division with comments.
I will stand on our written testimony provided.
Thank you very much. Hawaii Insurers Council in opposition.
Thank you again. The one thing that we just want to mention is we're concerned about unintended consequences. Homeowners insurance is currently sold as a package. You buy coverage for your building, you get a percentage of that coverage for your contents, for any outbuildings you have, and for your additional living expenses in the event of a loss. If there are mandates that would increase what those limits are for additional living expenses, we are concerned that we could lose the ability to sell those packages. It may not be economically feasible for insurers, and we go back to the old days of you buy the coverages all a la carte. So with that in mind, we stand on our testimony in opposition. Thank you.
Thank you very much. We also have, pardon me if I get it wrong, Krishna Bayudan online in support. Good morning.
Good morning. Aloha Chair Keoho Kalole, Vice Chair Fukunaga, and members of the committee. My name is Krishna Bayudan, and I am a lifelong Lahaina resident. My family lost our home in the fire, and despite doing everything possible to rebuild, our home is nowhere near ready. Our additional living expenses, ALE, coverage runs out for this March 2025. And without an extension from our insurance company, we will have nowhere to go. We needed a bill like this to pass a year ago. I asked you to explore making this bill retroactive so Lahaina fire survivors aren't left behind. But even if that's not possible, this measure is still crucial to protect future families facing disasters in Hawaii. A one-year ALE policy is simply not enough, even after a disaster of this scale. Even under normal conditions, rebuilding in Maui County takes longer than a year. In Lahaina, the process has even been slower due to infrastructure delays and supply shortages, factors outside of our control. Yet insurance still cuts off assistance after 12 months. A lot of people in Lahaina are in the same boat as my family. Many Lahaina fire survivors secured leases between January and April of last year because that was when FEMA was shutting down its temporary hotel housing program. And now those families are facing the same looming deadline. And we want to stay in Lahaina, but the skyrocketing rents and lost income make that nearly impossible. And FEMA's rental assistance program requires a lease, but finding housing here is challenging and the renewal process is exhausting and unreliable. The state's Kala'iola program only has 450 units, while thousands of families remain displaced. There's no guarantee we will get the help in time. And for 8 months, we lived under the Red Cross program, moving between temporary housing, unsure of what was next, and we can't go through that instability again. Lahaina fire survivors should not face homelessness while waiting to rebuild. Please pass this measure to ensure families in the future have the time they need to recover. Mahalo for your time and support.
Thank you very much. Is there anyone else who would like to testify? Okay, seeing none, we have written comments from the National Association of Mutual Insurance Companies, opposition testimony from the American Property Casualty Insurance Association, and testimony in support from the following individuals: Miri Yee, Jessica Herzog, and Jake Francis. That's all the testimony we've received. Members, questions? Okay, seeing none, we'll move to the next measure, SB 1129, relating to insurance. This measure requires the insurance commissioner to convene a working group to identify, assess, and recommend certain risk transfer market mechanisms. Insurance division with comments.
Stand on our written testimony and provide comments.
Thank you for standing on your testimony. We also have supporting testimony from Jessica Herzog. Is there anyone else who would like to testify? Members, questions?
Yeah,
Senator McKelvey?
yeah, well, Insurance Council.
Oh, okay, I don't think we testified.
Well, because, no, why aren't you?
Well, you're here.
Why aren't you,
so-
I mean, I'm curious why you're not testifying on this bill. Risk transfer mechanism could be, potentially could be quite helpful for committed carriers, right? I mean, but shouldn't the Insurance Council take a position on this?
All of us then.
It's a risk-
Yes, Commissioner
yeah,
study,
yeah.
working group.
Yeah, we don't, in general.
Well, your stakeholders, you're kind of.
If
the
you
big-
can identify yourself.
This is Allison Uyoka, Hawaii Insurance Council. We generally don't submit testimony on these types of things, but we're always called in to participate, and we're happy to do that.
In the future, you should be, because we are here on all these bills because of what's going on with the insurance industry. And I guess your input on this is important, like, will this provide a meaningful way to try to turn the problems that we're having around? I'm fascinated about risk transfer mechanisms. Do you think there's risk transfer mechanisms now that could be contemplated, or is a study needed? Do you think a study could thoroughly be able to map it out? What's your guys' observation from you? Because what the study's trying to address are situations that are impacting your industry, which are impacting consumers, right?
Right, I think we're going through that exercise right now through all these different forms of markets of last resort. So I think we're actually exploring risk transfer mechanisms right now through the legislation.
So we're already exploring them, right? And just briefly, it would be like, for instance, we have no hurricanes. Florida has plenty of hurricanes. We'll transfer the risk of hurricanes to Hawaii, but you go ahead. Florida has no fires really. So is that kind of how this thing works? Or is this, what exactly, for the layman out there listening to this bill, what is a risk transfer mechanism?
So reinsurance companies will cover all the exposures you reference, plus earthquake, plus derechos, plus tornadoes, plus hail events, you name it. They're covering everything. So it's one giant bucket of reinsurance money. And this money is located predominantly in places like London, Germany, Switzerland, Bermuda. There are some United States reinsurers as well. So as events accelerate, less of that capacity becomes available, and what capacity is available becomes more expensive. So that's why when the Lahaina event occurred, reinsurance costs for Hawaii insurers became significantly more expensive. There are other risk transfer mechanisms that roll into this reinsurance category. There are things like catastrophe bonds. There are things like private equity getting involved in the insurance business. That was very popular when interest rates were low, because private equity could make more money, they thought, writing reinsurance than they could in their typical financial investments. Now, interest rates got higher, so they could get a risk-free 5% rate of return with a treasury bond. So there's ebbs and flows in some of those, let's call those alternative risk transfer mechanisms. But the primary remains the reinsurance mechanism.
All right, thank you, Chair. Appreciate it. Thank you, guys.
Thank you, sir.
Thank you. All right, if there are no other questions, we will move to the next measure, SB 1140, relating to insurance of last resort. This measure establishes the Fair Access to Insurance Requirements Program, which shall be administered under the Department of Commerce and Consumer Affairs to ensure that residents in high-risk areas can purchase affordable and comprehensive property insurance coverage for their residential properties. Insurance Division with comments.
Stand on written testimony, providing comments.
Thank you very much. Attorney General's Office with comments.
Good morning, Andrew Kim with the Attorney General's Office. We provided our written comments regarding recommendations to make it clear that the FAIR programs in the Department of Commerce and Consumer Affairs and the Premium Stabilization Fund is inside or outside the state treasury. Thank you.
Thank you very much. Hawaii Insurers Council with comments.
Stand on our testimony.
Thank you very much. That's all the live testimony we have registered for this measure. Is there anyone else who would like to testify? Okay, we also have written comments from the Mortgage Bankers Association of Hawaii, Support from Lahaina Strong, Jessica Herzog in support. Comments from the Department of Budget and Finance, and supporting testimony from Miri Yi. Members, questions? Okay, moving on to the last measure on this 9:30 a.m. agenda, SB 1141, relating to insurance protections. This measure requires insurers offering homeowners insurance policies to comply with certain minimum requirements in cases of losses. Owner-occupied residences due to wildfire disasters. This measure also has an appropriation. Insurance Division with comments.
We'll stand on our written testimony providing comments.
Thank you very much. Hawaii Insurers Council in opposition.
Thank you. Our opposition is related to our testimony a couple bills ago. I think there's some unintended consequences that a measure like this that would mandate certain amounts of coverages be paid in certain instances could change the nature of how homeowners insurance is sold. So back in the day, there was something, there were different types of coverages where you bought everything a la carte. It's a lot more work for consumers, a lot more work for their agents, and people will tend to try to buy the lowest amount of coverage available. So they'll just maybe buy coverage to protect their mortgage just for the building, so they won't pay for enough contents coverage or additional living expense coverage. And those really are our primary concerns. We have a challenging market. We really don't want things that would make insurers decide that Hawaii is not a place they wish to write business. Thank you.
Thank you very much. Sherry Peterson, online in support.
Thank you, Chair Keo Hokalole, Vice Chair Fukunaga, and Senator McKelvey. I'm standing in support of my testimony, and I'm available for questions. I do want to make a couple of other comments. One is that I would ask that this bill
Ms.
make...
Peterson, your video is disabled. I think we saw you earlier. Can you try to enable it? And if it doesn't work, then
I did. I lost my power and internet in the middle of this hearing, and I just got reconnected. So I'm just happy to be able to even have my voice heard this morning, quite frankly.
Please go ahead.
Okay, thank you. So I just a little bit of background. I'm employed by United Policyholders, which is a nonprofit. I am also, I'm the Roadmap to Recovery Liaison and an Equal Justice Fellow, providing education, support, resources to homeowners, and also supporting this bill. There are similar measures enacted in California, Colorado, and Oregon, and the insurance companies made the same arguments against it in those instances as they're making today. I just want to say that we're talking about a catastrophic event. I would just like the word wildfire taken out of the bill so that it would cover any disaster or catastrophic event. And also just want to make the point that had this measure been in effect in the state of Hawaii, and this is to cover all of the citizens of Hawaii, Maui would be in a far different position than it is in its recovery now.
Okay.
Thank you.
Thank you very much. Next, we have Robert Hugh Jocelyn in support online.
I'm not available on Zoom, Chair.
Thank you very much. That's all the registered testimony we've received for people who indicated they would be present in the hearing. Is there anyone else who would like to testify? Please. Good morning.
Good morning, Senators. Thank you for giving me the opportunity. My name is Russell Homo with APEC Hawaii. I do support this measure, but I think we need to clarify certain things to streamline the homeowner's policy in terms of, the wildfire and disasters. I know there's a lot of fraud kind of things going on as well. And, with the current Los Angeles fire, I know a lot of insurance companies going to jack up the rates for the premiums, and especially for the new owners that's going to purchase the new homes. They're going to have a hard time, justifying and clarifying a lot of stuff to get their homeowners insurance. So I think you need to clarify certain things in the language that it's going to be in the same page with the national insurance company as well, and go from that page. I know that Maui's struggling right now with all those monies that they're going to get, and I'm sure there's going to be a lot of fraud and kind of activities trying to squeeze at the monies as well. So I think the insurance company needs to look into those kind of measures as well. But thank you for the opportunity.
Thank you. Is there anyone else who would like to testify? Members, questions? Okay, seeing none, we'll recess for decision-making. Recess. Good morning. We're reconvening on measures heard in a prior hearing. This is Friday, January 31st, 2025 at 9:35 a.m. in conference room 229. We're convening to consider three measures shortly. Recess. Okay, good morning and welcome back. This is the decision making on our 9:30 a.m. January 31st, 2025 CPN hearing in room 229. The first measure is SB 697 relating to an income tax credit. The recommendation on this measure is to pass with amendments. We will adopt the proposed amendments suggested by the Department of Taxation, blanking the percentage of costs, adding a sunset, and capping the carried forward provision. We'll also add a blank general fund appropriation to the DCCA for administration of the credit and the effective date of the measure to July 1, 2050. Members, any comments, questions? Seeing none, Vice Chair for the vote, passing with amendments, Chair votes aye.
Thank you. Vice Chair also votes aye. Senator McKelvey?
Yes.
Senators Richards and Awa are excused. Measure is adopted.
Thank you very much. The next measure is SB 706 relating to insurance. The recommendation on this measure is to pass with amendments. We will defect the effective date of this measure to July 1, 2050. Any discussion? Seeing none, passing with amendments, Chair votes aye.
Vice Chair also votes aye. Senator McKelvey?
Yes.
Okay, measure is adopted.
Thank you very much. The next measure is SB 803 relating to insurance. The recommendation on this measure is to pass with amendments. We will add a provision requiring providers, insurance providers, to automatically issue loss run reports at the end of each policy year. And we'll defect the effective date of the measure to July 1, 2050. Any discussion? Seeing none, Vice Chair passing with amendments, Chair votes aye.
Thank you. Of the members present, any objections or reservations? Hearing none, your measure is adopted.
Thank you very much. The next measure is SB 805 relating to condominium insurance. The recommendation on this measure is to, we're going to defer decision-making on this measure to Tuesday, February 4th at 9:30 a.m. You guys said something in the discussion that I forgot, and I want to revisit it and add it to the, potentially make further amendments to the bill. But the inclination is to pass the measure out accordingly. Oh, we're going to defer decision-making to Tuesday, February 4th, 2025 in this room 229 at 9:30 a.m. Thank you. The next measure is SB 1044 relating to the stabilization of property insurance. The recommendations are, well, before I make recommendations, I would like to make a comment. After hosting the joint briefing on insurance on Monday with our friends from the House CPC committee, I would like to note that I am alarmed by the pace of development of solutions here. Most of these discussions around addressing this insurance crisis center around administration of these plans, and specifically the capacity that's required to facilitate the process to stand up solutions to address this market problem at speed, because residents are suffering and we are hearing about it. We have been hearing about it. And so I'll ask for some latitude from the members, but we're gonna make substantial changes to the measure. First, we're gonna adopt the proposed amendments in the testimony from the National Association of Mutual Insurance Companies. We're gonna adopt the Attorney General's Office amendments, which make mostly clarifying changes. I've included to the members, which we will provide after the decision-making, proposed amendments that require the both entities to submit requests for proposal to have, as noted in the dialogue, domestic private insurers bid on potentially taking over administration of these programs, so that we have entities that have some capacity to get this going faster than we've been seeing so far. We also want to include language changing the fee structure for agents on these programs to a flat fee instead of commission. We also have some technical, non-substantive amendments that we'll be making, and blanking both appropriations for the study and the loan, the general fund loan, but noting in the committee report that the position of the administration is that for the HPIA side, a $50 million general fund appropriation in the form of a loan would be their preference. And will defect the effective date, July 1, 2050. Members, discussion.
Chair, I so appreciate your comments, and I hope that that 50 million is enough. And that's my only message right there. So, but thank you for moving this bill. Thank you, especially for your comments. Thank you.
Thank you for the amendments.
Okay, thank you very much. So passing with amendments, Chair votes aye.
Vice Chair also votes aye. Senator McKelvey.
Yes.
Senators Richard and Awa are excused. Your measure is adopted.
Thank you very much. The next measure is SB 1128 relating to insurance. The recommendation on this measure is to pass with amendments will defect the effective date of this measure to July 1, 2050. Any discussion? Okay, seeing none, passing with amendments, Chair votes aye.
Vice Chair also votes aye. Senator McKelvey.
Yes.
Senators Richards and Awa are excused. Your measure is adopted.
Thank you very much. Next measure is SB 1129 relating to insurance. The recommendation is to pass with amendments. We will adopt the insurance division requested amendment and require that the report be due 20 days before the convening of the 2026 legislative session. And to facilitate work on the by the group, we'll add a blank appropriation, general fund appropriation, and will defect the effective date of the measure to July 1, 2050. Any discussion? Seeing none, passing with amendments, Vice Chair, Chair goes aye.
Vice Chair also votes aye. Senator McKelvey.
Yes.
Your measure is adopted.
Thank you very much. Next measure is Senate Bill 1140 relating to insurance of last resort. The recommendation on this measure is to pass with amendments adopting the proposed, the Attorney General's Office proposed amendments. And I'm going to make a note in the committee report for reference for later committees that if the legislature proceeds with this measure, a working group to implement might be appropriate. There are also some technical non-substantive amendments and will defect the effective date to July 1, 2050. Any discussion? Seeing none, passing with amendments, Chair votes aye.
Vice Chair also votes aye. Senator McKelvey.
Yes.
Your measure is adopted.
Thank you very much. The last measure on this 9 a.m. agenda is SB 1141. The recommendation is to defer decision-making on this measure to Tuesday, February 4th at 9:30 a.m. in this room 229 at the Capitol. So on the 9 a.m. agenda, we are adjourned. Okay, reconvening on our Friday, January 31st, 2025. We need vote sheets, please. 9:35 a.m. agenda in room 229 to reconsider measures that were heard the other day that we're going to vote on right now. The first measure is SB 137 relating to electric utilities. The recommendation on this measure is to pass with amendments. We will adopt the following amendments proposed in the testimony record by the IBEW 1260. The first is we'll add the preamble language that was submitted. We will include the changes proposed to section E requiring assumption of existing collective bargaining agreements, and we will add the proposed definition of covered employee to the measure. We'll also defect the effective date, the measure to July 1, 2050. Any discussion? Okay, seeing none, Vice Chair passing with amendments. Chair goes aye.
Vice Chair also votes aye. Senator McKelvey?
Yes.
Senators Richards and Awa are excused. Your measure is adopted.
Thank you very much. The next measure is SB 142 relating to insurance. The recommendation on this measure is to pass with a number of amendments. The impetus for this bill comes from the current requirement that insurance consumers who have a mortgage after some disaster that requires them to file an insurance claim need to take possession of their claim check, endorse the check, and then deliver that check not into their own account, but to their mortgage institution before being entitled to it. This process creates an unnecessarily risky obligation to that homeowner over the custody of their endorsed claim check when electronic transfer between the insurer's bank and the lender is a safer and faster method that I believe benefits all parties. So the recommendation is to delete subsection E and replace the definition of the word check with the definition that's already in HRS 490. Remove the requirement that the check be mailed to the insured by certified mail and insert instead provisions allowing the insured to authorize electronic delivery of the check directly to the mortgagee from the insurer, and inserting language making it clear that the mortgagee, in receipt of electronic delivery of a claim check, is required to deliver the proceeds of the claim to the insured in accordance with the mortgage and the insurance policy. And we will defect the effective date of this measure to July 1, 2050 to further discussion on this. Any comments? Okay, seeing none, Vice Chair passing with amendments. Chair votes aye.
Thank you. Vice Chair also votes aye. Senator McKelvey?
Yes.
Senators Richards and Awa are excused. Your measure is adopted.
Thank you very much. And the last measure on this 9:35 a.m. agenda is SB 525 relating to mandatory prior written notice and consent in contracts to provide cremation services. We'll defer decision-making on this measure to Tuesday, February 4th at 9:30 a.m. in this conference room 229 as we continue discussions. Thank you. We're adjourned.